Hello, everyone. Adam Bergman here, tax attorney and founder of IRA Financial. On today's video, I'm going to explain step by step how to complete IRS Form 5500 EZ. Okay, so I'm going to go through each section of the form, kind of give you my insight and help you complete the form. The IRS Form 5500 EZ is only, okay, I'm going to repeat, only if you have a solo 401k. That means a 401k with no full-time employees other than yourself, other owners, or spouses. And, this is important, and if the plan assets are in excess of $250,000 as of 12/31 of the prior year. Okay, so number one, if you have an IRA, you do not have to file IRS Form 5500 EZ. Your custodian, i.e. IRA Financial Trust, will file 5498, not 5500 EZ. If you have a solo K and the plan assets are less than $250,000 as of 12/31, you do not need to file Form 5500 EZ. Now, if it's close, if you're at 220, 240, 230, 249, file it. Why? Penalties for failure to file can be $250 a day up to $150,000 maximum. Okay, so you might as well file it. The penalties are so egregious that not filing, and if you're close, is almost negligent. So file it. The form is easy. We'll go through it in a couple minutes. It's the actual one of the only tax forms that the IRS got correct. This is the way a tax return should be created. Our 1040 should essentially be one page, right? This is a really well drafted form. I give the IRS lots of credit. It's easy, okay? That explains the name. Now, if you filed it in a prior year because you had more than 250 and now the market dropped or your investment didn't work out, whatever the case may be, I suggest, this is what I do personally, keep filing. So let's say in 2020 you were at 280. Now 2021 you're at 230. Keep filing. Why? Because I promise you what's going to happen is the IRS will send you a letter saying, hey, XYZ company, care of Adam, why'd you stop filing the 5500 EZ? And that will just start a whole slew of communications with the IRS for no reason. If you just file it, even if the value is below 250, the IRS won't care. It's just an information return. The IRS uses it simply to keep track of your assets. And as we'll see in just a minute, it goes through the contributions, the rollovers, and the value of the assets you have in the plan. It doesn't ask what you've invested in, but it asks for the value of the asset. So it's really just providing the IRS a snapshot of the status of your plan. So let's just go through a couple of housekeeping matters to start with. Okay. Initially, you had to paper file this form. And you can just search IRS Form 5500 EZ online for a copy. And you can hard copy file it, which is very rare. There's not many forms left that you can hard copy, but you can. And you want to hard copy it, you got to send it in to the Department of Treasury, Internal Revenue Service, Ogden, Utah, 84201-0020. This is if you hard copy it, and you can always find this information on the 5500 EZ instructions. So you can just Google 5500 EZ instructions. You may locate a blog I did, or you can just look at the IRS site. You can also personally deliver it, like FedEx, UPS, and you'd send it to a different address, 1973 Rulon, White Boulevard, Ogden, Utah, 8804. So actually, what I will try to do is put it in the chat so you can see it. Okay, and this is FedEx address if you want to use it. You can also e-file it now. Last year was the first year where you can actually e-file the form. You don't have to, but if you're an accountant or you want to do it, you could also do it that way. So the IRS is trying to make it easier for you to file it. Now, if you're a client of IRA Financial, you are part of our annual consulting service, which you should. I'd say about 90-something% of our clients do it. We'll help you, complete the form and make sure it's done properly. If you do it by hand, make sure you not use a felt tip pen. You should use black ink. You don't want anything that bleeds through the paper. You don't want to make notes on the form. You don't want to include attachments or schedules. They just want the form. Okay. So let's talk about the form. Okay. It's, as I mentioned, really, really, really easy to complete. Okay. And I'm just going to include the link to the 5500 EZ. So people have it in the chat and you can just kind of click on it. Link to IRS form 5500 EZ. This is from the IRS site. So you could follow me if you wish. If not, I will go step by step. So if you look at the form, the first thing you want to do under part 1 is you just want to tell them what calendar year it is. So is it 1/1/01, 1/1/21 to 12/31/21? That's generally when the plan year will occur, although you may have different calendar years, taxable years, depending, but you want to just provide the IRS what period of time is this form for. And then you need to provide some information. Is this the first return, right? Did you set up the plan in 21? Is this the first return for the plan? Is it an amended return? Okay. Is this a final return? If let's say you terminated your plan in 21, you moved it all to an IRA, you're not self-employed anymore, you took $1 million job somewhere else, you just have to indicate to the IRS that this is your final plan so they know not to keep looking for any future filings, or if you're filing a short plan year. Okay. If you're filing this under an extension, 55, 58, you can check that box. Okay. If you are filing this as part of the late filer penalty relief program, which hopefully if you're a client of IRA Financial, you are not in any penalty relief program, but things happen, right? I spoke to a client who was in India and got COVID last year and just kind of like missed the deadline, right? He missed the July 31. He didn't file an extension. And just to be clear, I should have said this up front. The deadline for filing Form 5500 EZ is July 31. Okay. That's the deadline, July 31. Okay. You can get an extension filing a 5558. It'll give you to October 15th. But the deadline is July 31, 2022 for the 2021 taxable year. Okay. So you got a couple weeks left. You can always file an extension. And again, just to recap, if you have an IRA, do not file the 5500 EZ. I probably get 100 to 200 questions a year from clients saying, I have an IRA, I need help filing this form. No, you don't. You don't need to file it. If you have less than 250, do not file it. You could, not the end of the world if you do it. You don't need to. If you're close, file it. Okay? So let's start with part 2, which is the basic plan info. Your name of the plan. Most of this information can be found in your adoption agreement, your plan summary document. Okay, so there's basically 4 pieces to a 401k plan. There's the basic plan document, which goes through all the details of the plan. And then there's the plan adoption document, which tells the IRS what sections of that big plan document was adopted for your specific plan. And then there's a plan summary document that summarizes all the salient points that the adoption agreement adopted. Okay, and if you have a company with employees, generally you'll provide your employees with the plan summary so they can kind of check it out. The plan will also get a tax ID number. Why? So it can open a bank account. And the plan should also receive an IRS opinion letter that confirms that the plan has been pre-approved by the IRS. Most of these plans you'll get are prototype plan documents, meaning they've been pre-approved by the IRS so that your company and thousands of other companies that work with IRA Financial can use the same documents. But of course, your adoption agreement, the provisions you adopt are specific to your plan versus someone else's. So the name of the plan, that can be found in the adoption agreement, and you should know that. Also, the tax ID number should have the name of the plan. Let's say your company is ABC Inc. Name will generally be ABC Inc. 401k. 1B, the 3-digit plan number is generally 001 if it's the first plan for your business. Let's say you had a plan and you terminated it, or this is a second reiteration of that plan, you may use 002, okay? But most plans, if it's generally the only plan in the business, the first plan will be 001. That information is also found in the adoption agreement and plan summary. The date the plan became effective, that is also on the plan adoption agreement. For example, 1101, 11/2018, whatever it is. Okay, so you'll just include that. The employer's name, that you should know. That's the business that adopted the plan. So in my example, ABC Inc. Okay, the employer ID number, that's the tax ID number of the business. Now, what happens if it's a sole proprietor? What happens if Adam Bergman set up a solo 401k for my business, Schedule C, which I certainly can? Technically, I can use my social. I do not need a tax ID number. However, if you want to file, if you need to file the 5500 EZ form, you're going to need to get a tax ID number for your sole proprietor business, even if you just use it for purposes of this form. So you can go online to the IRS website, just Google IRS EIN, make sure you're using the IRS website, not some pay-to-play website, and then you can just go get a tax ID number for your sole proprietor business. And then you would just include it in the form. Okay, you can include a trade name, you don't have to. Obviously, if you have a trade name and that's kind of what you go with, you should include it. The mailing address, I assume you know that, okay? Now the business code, now you can find that in the 5500 EZ instructions, okay? So let me include the EZ instructions here in the chat. So anyone who wants it has it. And if you go through the form, through the instructions, you will be able to find all kinds of business forms. It's kind of towards starts at page 8. And for example, if you're in the, I don't know, finance and insurance, you can pick a slew of numbers that correspond, or if you're in real estate, or if you're in transportation, there's all these codes. So just pick the code that's closest to your business. Doesn't have to be, perfect, but, just keep it close. Okay. That's all that matters. That gives the IRS, the idea of kind of what your business is, just more for data collection purposes. 3A, we're on to the plan administrator's name. That's going to be the same as the employer. So if the employer is Adam Bergman or the employer is ABC Inc., you're just going to want to write same. You don't need to re-enter all the information. Just write the word same, S-A-M-E. Okay. Now form. Not a very common option or not a common selection, but if the employer's name or EIN is changed, you'll indicate this to the IRS. So let's say I had a sole proprietor and now I set up an LLC for my business. I'll indicate this information to the IRS in 4. And I'll give them the new name, the new EIN, and the new plan name, or the same plan name, but I'll include that information. You don't need to complete that if nothing has changed from your employer name or EIN point of view. Okay, so 4 generally is not a very popular, question. 5, okay, this is simple. How many participants are in your plan? For a solo 401k, the number often is 1, right, just you, but it doesn't have to be, right? To be eligible for a solo 401k, you can technically have a law firm with 10 partners, and let's say the partners have their spouses do all the paralegal and secretarial work. You'll be in a situation where you have no non-owner employees, right? Because spouses do not count as employees. So you can technically, and I have a bunch of clients that are, multiple owner plans, and they have no full-time employees that work over 1,000 hours. So they can set up a solo plan and use the 5500 EZ versus the 5500 short form. And obviously, who's a participant in your plan, right? It's 1 or 2 or 3. And it just asks, for the number of participants in the beginning, number of active participants at the beginning, at the end, and active at the end. Generally, it'd be all 1s, right? Or all 2s, or all 3s, or all 4s. And then you can include if anyone terminated employment in C. But generally, it's either like all ones, all twos, all threes. That's generally what people do. Okay, but again, solo 401k, just as a recap, in order to adopt it, 2 eligibility requirements. You gotta have a business. It could be any form. It could be a sole proprietor, an LLC, corp, C corp, S corp, partnership, and there could be no non-owner employees that work more than 1,000 hours. Now, spouses do not count as employees. So as I mentioned, you can have a situation where you have a 4-person consulting firm, all 4 partners, and no non-owner employees, right? Everyone kind of does their own stuff. Everyone works from home. No one needs a secretary, and they can have a solo plan. Why do you want to have a solo plan over a regular old ERISA 401k that you would participate in if you worked at a company like Apple or Tesla? Well, number one, you can put away more money. Why? Because the profit sharing component will let you go up to 20 or 25% of your comp, 25% if you're a W-2, 20% if you're a sole proprietor or single member LLC. Whereas if you worked at Google or Apple or Tesla or even IRA Financial, generally you get 3 to 5% match. Okay. Plus, as the owner, getting involved in an ERISA 401k requires you to have a third-party administrator and complying with plan testing or safe harbor, top-heavy rules, a little bit more complex and more expensive than if you have a solo K. Why? The ERISA rules, which were created in 1974, which created IRAs and 401ks, don't really need to apply to sole proprietors or small businesses with no full-time employees other than the owners. For the very reason that they don't feel like they need to protect those participants because owners are not going to harm themselves, right? The ERISA rules are really there to help rank and file non-owner employees. And if there's none, there's really no reason for ERISA to apply. So just a quick recap. Okay, 6 and 7, probably the 2 most important parts of the form. Total plan assets, 6A. Do not include any contributions you put in 1. Okay, so if you had $100,000 and added 10,000 during the year, your beginning of the year will be 100, end of the year will be 110. But do not put the 110, the 10 of contributions into 1. You can put it into 2, end of year, but not into 1. Okay, so just remember that. Some people get confused. Contributions go in 6A2, not 6A1. 6A1 is the value as of 1/1/21, and the end of year A2 is the value of the plan assets, including contributions and rollovers as of 12/31. Any liabilities? What's liabilities? You have a non-recourse loan about real estate, right? So any liabilities associated with your investments, use leverage by shares, stock, whatever it is. Most cases, it's usually a non-recourse loan. And then the net is U minus A and B, and you get C. Most important thing to remember with 6A1, do not include contributions in 6A1. Include them in 6A2. Now, part 3, question 7, financial information. Another way you want to include, this is a snapshot where the IRS can see how much you contributed to the plan. So employer is profit sharing. Okay, so anytime you see employer, that's the profit sharing, which is the maximum of 20% if you're a sole proprietor or single member LLC, or 25% of your comp if you're a W-2. So if you made $100,000 and you're a sole proprietor, the highest the employer contribution can be is, let's say, 20K. Whereas if you were a W-2, the highest the employer contribution could be is 25K, 25% of 100. Your participant, that's the employee deferrals, which is max of 20,500 or 27,000 if you're over 50 in 2022. 21 was 19,500 and 26. Okay, so remember these are 21 numbers, not 22. Okay, and then 7C is any rollovers. Rollover is money that comes from a retirement account, an IRA, 403, 457, anything that you rolled in. You put that in 7C. Now, this is a question I get often, and there's not really a correct answer, but it's more about being consistent throughout your approach. So what do you do if you made contributions in 2022 for 2021, right? Profit sharing contributions, employer contributions technically can be done when you file your tax return or until the business files its return. So in 2021 ends 12/31, right? We all celebrate New Year's. And let's say you file your tax return March 15th. and the employer contribution is due March 15th or April 15th, or maybe October 15th if there's extensions. What do you do? Well, you should be consistent. So if you start in 21 and you apply the 22 contributions for the 21 year and put them on the 21 easy form, keep doing it the same way going forward. Okay, that's all I suggest. I think the right way of doing it, the way I do it, is I treat the contributions, even if they're made for 22, on the 21 form if I am treating them as a 21 taxable contribution. So even if I'm making them in 22, but I'm reporting them for my 21 taxable year on my 1040 or my 1120 or 1065 or whatever I'm using, I want to make sure the 5500 easy form correlates and matches up with those numbers. So I'm going to follow the same principles and make sure that I'm treating the 22 contributions for the 21 year. Technically, if you are a W-2 employee, C Corp or S Corp, your employee deferrals should be done by 12/31, and the employer are due when your company files its return. If you're a sole proprietor or single member LLC, technically employee deferrals and the employer contribution should be done before you file your return. The reason for the difference is you know what your W-2 is, so the IRS feels like you have the opportunity to put the money from the employee side as a 12/31. Now, technically, the rule is elect. So you can write the check in maybe January or date it 12/31 and deposit it, but you want to make sure that it's for the 21 year. If you can make the W-2 contributions in 21 for the 21 year, but at least elect to do it. Maybe it's a letter to file, say, hey, I, Adam Bergman, elect to make employee deferrals of $15,000 for the 21 taxable year, and maybe your check gets deposited in 2022. That's only for a W-2. If you're a sole proprietor, single member LLC, you can simply use the up until you file your return, whether it's a 1040 because it's Schedule C, you have until say April 15th or extensions to make those contributions. Plan characteristics. This is found in part 4. And if you don't know what the characteristics are that apply to you, guess what? It's instructions. If you look at page, I believe 6 on your instructions, okay, if you go to page, 7 out of 10, but if you look at the numbers on the bottom, it's 7, you'll get the codes. And just to give you an idea, some of the more popular codes are if you have solo plan through IRA Financial, you can put 2E for profit sharing plan. You can do 3B, plan covering self-employed individuals, 3D for pre-approved pension plans. You can do, if you, let's say, are a control group, right? Let's say you have 2 or 3 businesses and you own more than 80% of 2 or 3 companies, you technically only have to have one 401k for those 3 businesses. So you can include 3H. And you should include these codes because you want to let the IRS know what type of plan you have, especially if you're part of a control group, meaning you have 2 or more businesses that you own 80% or more of. So let's say I have a single member LLC or 2 single member LLC. One, I'm a consultant. One, I do other activities through, and I only have one plan because they're both part of a control group. I need one plan. I want to let the IRS know that I'm going to use the income from both companies for purposes of contribution maximum levels on this EZ, and that will be a 3H. Okay, so all the codes are on page 7 of 10 of the instructions, and the 3B, 3D are popular, 2E. And if you're using a brokerage, you can do 2R, participants directed brokerage account. You just want to be as specific as you can. There's no right or wrong, right? Everything is based off what type of activity you're doing, but you want to be as accurate as you can. Okay, part 4, question 9. Did you have a plan loan? Did you take out a loan from your plan? The most you can pull is $50,000 or 50% of your account value, whatever's less. Okay, so if you do yes, enter the amount as of the end of the year. So what loan amount is outstanding as at the end of the year? If you haven't taken out a loan, just hit no. And guess what? We're done. 10, 11 are not relevant. You don't, unless you have a defined benefit plan, but IRA Financial clients generally do not have a defined benefit plan. We send all our DB clients to a great company called Pension Investors. They have offices in Fort Lauderdale or Orlando, Florida. And they've been in business 40 plus years, and they are the defined benefit experts probably in the country. So if you are looking to put away, 100K plus in a retirement plan, and you have a business with steady flow of income, not a lot of employees, and you're over 50, let me know, and I'll get you in a DB plan. You'll be able to go up to almost $300,000 a year in contributions and deductions. And then 11, if you have a minimum funded DC plan, which we don't have, you put, so you're going to just include generally on no's for 10, 11. And then you're going to sign it. That's it. Just sign it and date it and print your name. I think we can all do that. And then you're done. That's it. It's easy. It really is easy. So the solo 401k 5500 easy form is, I think, the easiest tax form I've seen. And it's another reason why the solo 401k is such a popular option for the self-employed and small business owners with no full-time employees, because it's such an easy form to complete from an administration standpoint. Okay, so the form needs to be filed annually. So someone asked the question. It's a good question. This is due July 31. You can get an extension to October 15, and it's an annual form. It's as of the values as of the previous year up to 12/31. Okay, that's it. So if you have less than 250 as of 12/31/21, you do not have to file the form. If you're close, file it. If you had 250 plus and now we're under it, my suggestion is keep filing it, because you don't want to get into a situation where the IRS is going to correspond with you and kind of ask you what happened to your plan, and ask more questions and have you deal with that stuff. But if you're really way off, right? If you're at 100, 150, 60, don't file it. It's okay. It's only when you start filing, I just suggest continue filing it. Other than that, you can file it by hand. You can file it electronically. Do not include schedules, attachments, make notes. It's super simple. If you have questions, let us know. Okay, we're here to help. One thing IRA Financial we take pride in is we have a phone number on our website. Unlike a lot of fintech companies, a lot of crypto exchanges, we want you to call us. We have an amazing team of self-directed specialists that are super well trained on this stuff that will get you an answer. And it's another good reason to be part of our annual consulting service. We will make sure you have all the information you need, to complete the form and navigate these rules. So just looking back on it, a couple, last minute pointers that trip people up. If it's your last year, indicate it. And if it's your first year, indicate it. Other than that, if you're a sole proprietor and you don't have a tax ID number, you're going to need to get one. If you don't know how to get one, let us know. We can help you get it. It takes 10 seconds and it's free. And other thing, the big stuff is 6 and 7, right? Part 3 and part 4. Total plan assets 6A1 do not include contributions. This is as 1/1/21, how much money value in your plan. It's not what you paid for, okay? Just to be clear. This is the last kind of point I want to make. And I should have brought this up earlier. When you complete 6A1, you use the fair market value, not what you paid for the asset. So if you bought a piece of property in 2018 for 100 and now it's worth 300 as of 1/1/22, or 1/1/21, I should say, because this is based off the 21 tax year, you want to put the 300 value, the fair market value. Okay. You don't want to just use what you paid for it, the basis. For real estate, you can use an online source like Zillow, Trulia, anything that is independent to get your value. If you're under 72 years old, there's no required minimum distributions. So the value isn't as tax significant as it would be if you're over 72, where you have to take required minimum distributions. If you are over 72, be very specific and very accurate when you include the fair market value of any assets. Stocks, cryptos, cash, that's pretty easy to determine. Anyone could just Google search what that property was worth as of 12/31. But if you have private placements or hedge fund interest or private equity interest or private business interest, you want to try to get a third party, whether it's the general partner of the fund or the business person that manages the private business you invested in, to provide you some type of value. So then you can then document that on the form. The end of the year is as of 12/31. That is the fair market value as well. Do not include what you paid for it, include the fair market value. If you have a mortgage, let's say you paid $100,000 or you put in $100,000 of IRA money and you borrowed $100,000. What's the fair market value of the property? Some people will say it's 100. That's what cash I put in. No, it's 200. Okay, you'll net it out on B. So ultimately you'll show the 100, but you want to, in A1 and A2, you want to show the value of the asset including liability. Why? If you meet someone in Starbucks and they're like, and they say to you, how much is your house worth? You don't say, well, I put $100,000 down and I took a $400,000 mortgage, so I guess I have equity of 100. No. You say your house is worth 500. Makes sense, right? So that's what the IRS wants to know. Okay, they want to know values, what it's worth. So just make sure in A1 and A2, remember that. Remember also in A1, do not include contributions. And then part 3, question 7, remember employer contributions are profit sharing. It's at 20 or 25%. The participants, the employee. Okay, and then rollovers are any money you rolled in from an IRA or another retirement plan into the plan. The plan characteristics, remember to look at the instructions. I put the link in the chat box, page 7 of 10, and you can just find whatever works for you. I mentioned all the popular ones. If you had a loan, you'll put yes or no in 9, and then 10 and 11 is always no, so you don't have to worry about that. Sign it and either mail it in or electronically file it. And lastly, if you have questions and you're a client and you're unsure, let us know. We're here to help. You don't need to spin around in circles. We will assist you. So there you go. I hopefully gave a very detailed summary of how to complete IRS Form 5500EZ. Remember, again, it's not for IRAs. It's not for SEPs. It's not for simples. It is only if you have a solo 401k plan with asset values as of 12/31/21 of more than $250,000. If you're close, file it. And if you've filed it in the past and now your assets are below the $250,000 threshold, my suggestion is to keep filing the form. That's it. I hope you guys enjoyed today's video. It was a lot of fun. And look forward to doing the next YouTube live shortly. Remember to subscribe to this channel because we generally drop 3 videos a week, 3 to 4, depending, and 3 podcasts. So if you are interested in learning more about self-directed retirement accounts, self-directed IRAs, solo 401ks, check us out. Great content. I put a lot of effort. This is my passion and content. I spend probably most of my weekends and a lot of my days, believe it or not, just writing. I've written 8 books on self-directed retirement topics, and I try to write 5 blogs a week. And obviously, I put a lot of effort on videos and podcasts. So if you're interested, it's free. Check it out. Appreciate any feedback you guys have, and have a great summer. I know it's quiet. People probably have a lot of better things to do than listen and watch a video on filing an IRS tax form. Yeah, I get it. I didn't expect 50,000 people to view this thing, but it's important because we have thousands of solo 401k clients, and you do not want to mess up. Trust me, the penalties can go as high as $150,000, $250 a day, and you don't want to be part of this filing program, okay? And you have to get penalty relief. It's a big pain in the butt. So just file it. You can file an extension, but get it done. If you have questions, you're a client of IRA Financial. We're here to help. Give us a buzz. Send us some email. You can chat us on our website, and we'll get you the answers. Otherwise, have a great rest of your day. Enjoy your summer, and talk to everyone again soon. Be well.